Well, we have another big call on Tesla today. Piper Sandler saying that the market is underestimating Tesla's growth potential in China. The firm hiked its price target on the stock to $553. That represents a 30% upside from yesterday's closing price. We have Brian Cheung with us now. And Brian, when we talk about the fact that they think that the street is underestimating the potential value or potential growth from China, what do you make of that?
Yeah, well, it's a 30% upside that Piper Jaffray has. That's relative to its previous target. That was $423. We just flashed the chart for you. The shares of Tesla right now trading at about $479 a share. So this is basically the street moving the guidepost for where they think the stock should be trading, as it's had a pretty monstrous 2 months or so. Consider that Tesla, if you look over the last 12 months, had actually been underperforming the broader markets for a good amount of time. Since then, we've actually seen it rise 38% over the last 12 months. Keep in mind that the S&P 500 during that same time has risen by only 26%, still a pretty penny, but Tesla just really on this surge amid all the optimism in China. The reason why Piper Jaffray upgraded their target is because they've been looking at China's vehicle registration data. This is according to CNBC, and they say that that registration data showed a 19% jump in sales of the Tesla Model 3. You'll recall that earlier this week on Tuesday was when Elon Musk had that big bizarre event in China where he was dancing around. He was doing that to announce the first customer deliveries of the Model 3. So this is only just the beginning. So if those numbers already show a 19% jump in sales, that means that Tesla could have a really great market in China, which is quite frankly the largest EV market in the world and the prize of a lot of other automakers when you consider VW, Ford, companies like that that are actually teaming up to try to tackle this Chinese market as well.
Yeah, and Brian, what's interesting here is just in terms of the fact that they're so bullish on China. We have to remember that China's auto market is actually, the auto sales in China are expected to decline even further this year. So it's important for investors to keep that in mind when they're trying to make some of these projections as well.
Absolutely, and the Chinese economy is slowing at large, so that probably explains a lot of those auto purchasing trends that you've seen. But regardless, because of the size of China, right? I mean, in terms of population, about 1 in 6 people in the world are in mainland China. So this is just there's a huge total addressable market. It doesn't necessarily mean that Tesla will be the only player there. You see the list of automakers in front of you, but there are a number of other EV-specific names in the space, like NIO, which has been having a pretty rough last 52 weeks, but they are still trying to fight and try to beat Tesla. They're hoping to, brand themselves as the domestic automaker that can take on Tesla. But as we think about those big EV names, Tesla and Elon Musk specifically are one of those that are commanding the space. So they seem like the front runner right now. But again, a huge market to be played with in China.
All right, Brian Cheung, thanks so much.